small brands are a prime target because they're less likely to have a compliance system in place. The grace period is kind of over. When you're paying back taxes, you're paying it out of your own business bank account. Audit, right? Assessment that can run from 50,000 to 300K.
Welcome to Profits on Purpose, which is a podcast for e-commerce and CPG founders who are navigating the intersection of purpose-led entrepreneurship with the financial realities of needing to generate a profit. I'm your host, Nate Littlewood from Future Ready CFO, where I help e-commerce and CPG founders turn financial chaos and confusion into strategic clarity and decision-making confidence. Anyway, today's guest is Lahari Neelapareddy, who's the founder and CEO of TaxHero. Lahari, welcome to the show. It's great to have you here.
Thanks, Nate, for having me. I'm super excited.
Likewise. Well, Lahari, for those who haven't heard of TaxHero before, could we maybe just take a minute to introduce the business and explain what you guys actually do?
Yeah, so TaxHero is an all-inclusive full stack sales tax solution. So I know it sounds like a mumble jumble of things, but what that really means is that we're end-to-end compliance for sales tax. So we have a software component, but we also have a service component managed by accountants and CPAs as well. So we do everything from checking if, they have nexus in a state or have crossed a threshold in a state, registering, doing the returns, doing sales tax audits, doing sales tax reconciliations for the parts of their books, as well as responding to states, being the PO mailbox. So anything that has that U.S. sales tax tag to it, we pretty much handle on behalf of founders and accountants.
Oh, cool. Well, thanks for the overview. From where you sit, how big is the gap between what founders should be doing when it comes to sales tax and what they're actually doing?
So the gap is a lot larger than most brands anticipate, and it's kind of no longer safe to ignore. So in 2018, there was that Wayfair decision that created economic nexus, which you've explained, meaning a business can owe sales tax in a state by just hitting a revenue or threshold there, even with zero physical presence. So most founders, what we have noticed, either never properly set this up or set it up once and never maintained it as they scaled into new states. So the compliance gap we're seeing isn't just like, oh, they're missing a filing. It's like years of unregistered nexus, uncollected tax, and unremitted amounts across multiple states. So we regularly talk to founders that are six figures exposed without even knowing that they're exposed. And states are no longer giving kind of the benefit of the doubt that we had back during the COVID realm. There was a huge benefit of the doubt. But now many are going back to 2018 to assess liability. So the grace period, you could say, is kind of over. And now recently, states kind of know exactly what your revenue looks like in their state because of 1099K filings, marketplace filings, and stuff like that. So because of that, they're kind of acting on it versus just kind of staying quiet.
I see. So I work with a lot of seven-figure founders, as I think you know, and I sense that there's a common misconception or belief amongst these folks that, they're kind of too small to really get on anyone's radar, and that it's okay to just, defer this and kick it down the road until we grow up, until we're a bigger business. Tell me what's wrong and dangerous about that approach. And you touched on it just now, but if you could expand a little bit on some of the things that might actually trigger an audit and make the states actually, come looking at you or for you.
Yeah. So you're not the first person I heard that from. When I even talk to people on sales calls, I hear all the time, like, oh, are we too small? Like, should we wait a little bit? Because it's not my priority to get this taken care of. Right. But that myth of like, oh, you're too small is kind of dead. States have sophisticated tools at this point to be able to know your revenue. They're using, like I was saying, third-party data, 1099K filings from payment processors, a marketplace form data to identify sellers who haven't registered. So you'd be shocked to hear that like a lot of states have literally sent questionnaires to
Hmm.
unregistered sellers that they
Wow.
believe have already crossed nexus in their state. So we've
Right.
seen that. And so like they already know before you know sometimes.
Mm.
And typically like a brand doing like 2 million, which is not that much, you would think, right?
Hmm.
Total, they might have nexus in 10 to 15 states because the threshold is 100K and that
Mm.
applies to the state, not nationally, right?
Yeah.
Uh,
Yeah.
and also states are sharing information with each other
Oh,
through
wow. Okay.
coordinated clients groups.
Huh.
So, people that are registered through the multi-state, you know, uh, they are kind of exposed to multiple different states if one state decides to audit. So those states are kind
Mm.
of information with each other, which is something that people should be careful about. And
Interesting.
I actually think small brands are a prime target because they're less likely to have a council or compliance system in place. So,
Mm.
which means that it could be easier collections and less pushback for states.
Yeah. Yeah. Okay. And so what happens if one of these states actually does come knocking on your door and says, hey, there's something's not adding up here. We think you have Nexus and that you need to be paying a sales tax. Like, what does an audit actually look like?
Yeah. So an audit isn't just like a financial cost, that's what most people think of. It's also sometimes an
Mm.
operational nightmare because you have
Right.
to pull different people to get the data that needs to happen or that the state might need. And it
Yeah.
could be months of work that's actually
Mm-hmm.
there. So typically what will happen during an audit is you'll get a notice or a questionnaire these days, which is a new
Yeah.
thing from the
Mm-hmm.
states. Um, Out of nowhere. And that's where like the panic starts. If you get a
Mm-hmm.
notice, typically it will be on that notice an estimated amount that you might owe, which
Mm-hmm.
is always an alarming amount. It's actually
Yep.
sometimes 9 out of 10 times actually a lot more than you actually owe, but they try to
Yeah.
scare you with this large worst case scenario type of amount.
Yep.
And then they'll ask for 2 to 4 years or even longer of sales records broken down by like marketplace sales, wholesale, exempt, taxable sales, and sometimes even exemption certificates. Um,
Mm-hmm.
and then you'll have to obviously pull that data. And it can take anywhere between 40 to 80 plus hours of internal time to get
Yeah.
everything over for the audit period that they need. Once
Wow.
they assess, then the states will take some time. It'll be a little bit back and forth, but they'll do like a tax assessment, like the amount that they believe you owed, including back taxes, interest,
Mm.
penalties. And then from there, that's when you can kind of negotiate certain things if there's a reason why it wasn't done correctly and stuff like that.
Okay.
However, you cannot negotiate back taxes. If you actually owed that amount,
Right.
you actually have to pay that amount.
Okay.
Interest also is really hard to negotiate, almost impossible. That
Okay.
accrues from when the tax was originally due. So, like, if that tax was
Okay.
due in 2019 and you actually owe that back tax, that interest has been accruing since 2019 till now.
Mm. So what do the
Penalty,
interest rates and penalties look like on this?
it's different state by state. There's not really an
Ah.
average, but it could be between 10% to 25% of what you owe.
Mm-hmm.
Washington, for example, largest penalty, it's 39% of on
Wow.
top of the owed amount.
Wow.
So, it could be a few $1,000s for a small brand in one
Yeah.
state to hundreds of thousands for a multi-state, multi-year exposure.
Okay. Okay. So you said that the base tax due is not really negotiable. The interest or penalties are not really negotiable. What
Interest,
parts what
so
parts of this are
interest
negotiable? Well,
penalty is negotiable, but interest is
okay.
not. So penalty,
Okay.
if there's a good reason for penalty, like, and we've done it with clients that we've taken through in an audit.
Okay.
If it's like an issue because of a software,
Mm.
of something that they're not using anymore, typically we could try to negotiate with the state to get rid of the penalties.
I
So
see.
there could be other reasons why, like, or it's their first time and they had no idea. There's certain cases and scenarios that we can negotiate penalties with depending on the state and depending on the
Okay.
circumstance. Interest and back taxes are, like I said, 95% of the time not negotiable because it is what they actually owe. And
Mm.
this is
Mm.
money that's when you're collecting sales tax correctly, you're not the one paying it, right? As a business owner, you're actually collecting it
Mm.
from the end consumer.
Mm-hmm.
and you're
Mm-hmm.
collecting it and then paying it. But when you're paying back
Yeah.
taxes, which is basically taxes you never collected on,
Mm-hmm.
you're paying it out of your own business bank account,
Yeah.
which is a
Yeah.
huge difference.
Yeah, yeah, because it wasn't baked into your margin at that point, right?
No.
You never got it when you made the sale, and it's not like
Yes.
2 or 3 years later you can go back to a customer and say, "Hey,
Mhm.
remember order number 10273? You didn't
Yeah.
pay sales
Yeah.
tax on that." No,
They're like, now
that's
you're
not going to
good.
work.
Yeah. You basically can't collect it. So it's coming from your own
Yeah,
money.
yeah, you're exactly. Yeah, yeah, okay. So you mentioned that if there was an issue related to a software or tool that you've been using, that might be something that's negotiable. Not that I want to, bash on a competitor or anything here, but I think there was an issue a little while ago with Avalara and Illinois. Is that correct? And is that
Yes.
an
Yeah.
example of what you're talking about there?
Yes, we've seen a lot of audits come through for clients that were on Avalara and now maybe moved over to TaxHero. And it's
Mm-hmm.
what the issue here is, and specific to Illinois, back in 2018, they were for out of state sellers, they were charging a flat seller's use tax rate of
Mm-hmm.
6.25% if you're out of state.
Mm-hmm.
Starting in 2021, they changed the rules that even out of state sellers have to collect something called retailer's occupation tax, which
Mm-hmm.
means it's state plus local sales tax.
Mm-hmm.
So a
Okay.
lot of users of Avalara, and not just Avalara, any software that is just software, they set it up
Mm-hmm.
and they let it go, right? They don't go
Mm-hmm.
back and look at it. They're not keeping up with the rules. And they don't have somebody on their staff or internally that is owning the software
Yeah.
technically. And so,
Yeah.
like, what ended up happening is that the configuration was wrong in Avalara for a lot of brands. They didn't configure it properly.
Mm-hmm.
And
Mm-hmm.
so they were only charging the state sales tax and not the local sales tax.
Yeah.
So we've seen in audits come through multiple for Illinois, particularly when they caught this issue on one company that was
Mm.
using Avalara, they kind of sent it out to multiple other brands.
Mm-hmm.
And
Mm-hmm.
so, and that audit period was from like 2022 to 2025, which is when they should have been collecting that local
I
tax.
see. Yeah, yeah.
Uh,
Okay. And just for
yeah,
the sake of clarity here, we're talking about not just like state level sales taxes, but there's also local or county level taxes as well. And so if you looked across the whole of the US, I think there's actually like hundreds, if not thousands of different tax rates. Is that correct? Based on your
correct,
specific
correct.
address? Right.
Yes,
And
correct.
these thousands of different taxable locations, essentially what you're saying is that like these tax rates can change over time. And just because you set it up correctly last year or last month doesn't necessarily mean it's going to continue to be that same tax rate.
Correct. We had just in
Mm.
like the first half year of 2025, there was a 408 sales tax rate changes alone,
Wow.
just for
Okay.
half a year in 2025. So that should be able
That's
to tell
crazy.
you like how much things are
Yeah.
changing.
Yeah, yeah. Okay. And I guess a big part of the argument for a founder working with someone like you is that you offer, one centralized location where you kind of keep tabs on all these changes, I guess. And whenever you see a change, you can deploy that change to everyone on your platform. So the individual
Correct.
brands don't have to track, these thousands of different taxable rates, right?
Yeah, so that's like the
Got
pro
it.
of like having a managed service versus like having somebody internally, right?
Yeah.
This is not like fun, sexy stuff, right? Sales tax.
Yeah.
So
Yeah.
when people going to college, nobody's focusing on just sales tax. You're not finding someone brand new out of college being like, I want to work on sales tax, right?
Yeah.
And so it's usually somebody that's like has it as part of their role at a company sometimes, and they don't have the time and the bandwidth sometimes to keep track of everything. So
Yeah.
that's where things kind of fall through the crack. They're like that 5% or less than 5% of their time is for sales tax. And with that time, they're not able to, manage all the changes that are happening constantly.
Yeah. Okay. Yeah. Makes sense. Makes sense. So there's a lot of moving parts here, right? There's a lot of different tax rates. We've also got nexus thresholds, which I understand can move around a bit. I think there might be issues around product taxability. Some things
Correct.
are and are not taxable. And there's, I'm kind of thinking back to my own stint as an e-commerce operator. When we did a lot of back and forth with our accountants at one point, talking about marketplaces, and
Mhm.
we were selling a lot through Amazon, and the idea was that Amazon is meant to be taking care of the sales tax because they're actually the one transacting with the customer, not us. I realize this is a very long question, but what are some of the biggest mistakes that founders make when you walk into a new business, looking at a new company? Like, what are some of the biggest gaps and issues that you tend to find across the issues that I just mentioned, or something else?
Yeah, no, you kind of mentioned kind of the main points, but some of these things. So, for example, we'll start with the marketplace because,
Mm,
that's like a big topic right now. So, Amazon does collect, and not just Amazon, some other marketplaces collect and remit sales tax on your behalf
mm-hmm.
in most states, but not all and not for all transaction types. And things change. Like
Okay.
August of last year, Shopify, or not Shopify, Facebook said that they are actually Facebook and Instagram, they're a marketplace, but they're actually said that they're not going to collect and remit on your behalf anymore. So
Hmm.
Shopify sent an email that went in on everyone's unknown inbox, right? Of,
Right.
hey, yes,
Everyone's spam.
exactly. So like,
Yeah.
hey, Shopify is not going to collect and remit and for Facebook and Instagram sales. You guys have to
Okay.
take care of it yourself. Large compliance platforms themselves didn't realize that there was this change across, the board. So they were not remitting the sales tax that was collected for Facebook and Instagram,
Right.
which is a big thing because it's like a critical thing is you should never collect and never, if you should never collect and not remit that basically.
Mm-hmm.
So we
Mm-hmm.
haven't seen audits come for that yet, but I just know it's like a matter of time to
Mm,
get that. So it's very important to be compliant in that versus not. So things are
mm-hmm.
changing. Like we're having new tools like TikTok Shop, right? It was something new that was introduced last year or like
Mm-hmm.
later half of 24 that wasn't there before. That's considered a
Yeah.
marketplace. They're collecting and remitting. So like there's more
Yeah.
platforms and more things that are being added, which is where I think you should never just, you should understand what's going on with this and what changes are happening. I think the
Yeah.
other large mistake that we see is a client will come to us and Shopify has this alert that will say like, hey, which is a cool feature that they added, like, hey, you are meeting Nexus in the States and you should start collecting. And
Mm-hmm.
a shop owner will decide to just click on start collecting button because it's like easy to, click on that
Mm,
button. But
mm-hmm.
they actually never registered in that state. So
Ah.
that is actually unlawful collection again. So
Oh,
critical
wow.
rule
Okay.
is like register first and then collect. It's actually
Okay.
worse to collect without registering.
Right. Okay. Okay.
So that those two are big. Obviously, the nexus threshold confusion is a big one. They don't really know where
Mm,
they meet the requirements, and states are getting rid of certain things. Like they're changing their threshold in a good way, actually. Like a lot of states have removed the transaction threshold of 200 transactions. They have
mm-hmm.
actually removed that and just only kept the dollar threshold, which is actually better
Mm-hmm.
for most brands.
Mm-hmm.
And like you said, even product taxability, like new types of products are coming out. Like even electrolytes. You would think that like by this point, each state has some, regulation about electrolytes of is it taxable or not in their state. But
Mm-hmm.
it's
Mm-hmm.
actually still a gray area depending on how you kind of market it. Is it a
Hmm.
supplement or is it,
Wait, depending on how you market it, so the
yeah, like
same
how it's on their
product.
website?
Oh my God. Okay. This is this is okay.
Yeah,
This
it's
gets even more confusing. So the exact same product, based on how you market it, could move from being taxable to non-taxable. That is
correct.
crazy. Okay. Wow.
And it's some of these newer, you could say newer, but not really, right? Electrolytes have been there forever at this point, in my opinion. But these
Yeah.
states have not caught up to these type of products that we're selling online. So the
Yeah.
way it's on your website could change your taxability, honestly. And these are things that we
Wow.
found out by calling the state when things are gray and just like making
Mm,
sure that like, hey, we have it documented so that if the states
mm.
ever come back and audit us, we know exactly what to say.
Yeah. Okay.
So that is could
Wow.
also a major mistake that we see is product taxability errors as well.
Yeah, there's certainly a fairly overwhelming number of moving parts here. And I think it's pretty easy to see why a founder could feel very overwhelmed or daunted by this. So if someone's listening and sitting in that situation and feeling those feels, talk us through their options, right? Like they could hire someone to manage internally to manage this for them. They could use a tool like Avalara or TaxJar, or they could use a managed service. How should a founder think about, what they actually need here? And are there kind of different stages according to the size of the business? Like, help us think through some of those issues.
So typically, like if you're pre-revenue or have just started, have a few orders and sell, testing your proof of concept, I would say you
Mm,
could use like that DIY approach and internal approach, right? Of
mm-hmm,
having some your early stage, you're maybe in 1 to 2 states, low volume, right? Of
mm-hmm,
having them manage it because it's low cost, right? However, I
mm-hmm,
think slowly that's when you kind of need to move forward into what I would say the managed service is the better option. The
mm-hmm.
software only works well if you have an in-house accounting or operations bandwidth, but most companies are moving away from that, right? Like they want their in-house people to be working on value add services. And we know sales tax is not really a value add service. It's something that you need
Yeah.
based on
Mm-hmm.
compliance. And it's
Yeah.
a lot more expensive to have somebody in-house managing another software that you're paying significant amount of money for. So I
Yeah.
would say the best approach for growing brands, especially if you're like in 3+ states, and scaling fast, is a managed service like TaxHero, and there's obviously other ones out there. It
Mm-hmm.
makes sure that the full risk transfer is on the managed service, and it's expert led and it's more proactive than just being reactive.
Okay. Can you elaborate on what you meant by risk transfer?
Yeah, for example, for Tax Hero, we say that if we
Mm,
file something incorrectly or something's on us, that we do, or we
mm,
file late, which we haven't done, but like if we do, then we will take the penalties and we will pay that instead of
yeah.
that money coming out of, the brand having to do that. And so I think
Yeah.
that's where the cons of most of these older softwares like, TaxStar, Avalara, they don't really do that.
Mm,
And so the risk is still on the brand because they're still required to manage the service, right? Versus a managed
okay.
service will fully take on most of the risk of doing it because it's not
Okay.
just the software. They're part of managing the software too, right?
Okay. So sounds like a really important differentiator. Like you're basically saying that the softwares will say, hey, all care taken, but no liability accepted. Whereas you're
Correct.
saying, if we mess this up, we're going to own that and that will become our
Correct.
problem. Right.
Correct.
Okay.
Because it's
That's,
like if you look at most of these tax softwares, they'll say like, "Oh, consult with the tax professional." Like
mm,
they're not owning it. They're telling you that like, "Hey, if anything's
yeah. It's
wrong."
like, I want you to be my tax
Yeah.
professional. What are you talking about?
They're
So
like,
I'm
"I
here.
thought that's why I hired you." Yeah, or
Yeah.
purchase the
Yeah.
software. And honestly, that's how the idea of Tax Hero was born. I was on the other side of using it for my clients that with my accounting firm of like, okay,
Yeah.
let's use TaxStar or Avalara, but then the risk was still on either the founder or accounting firms,
Right.
because they had to
Right.
be the ones to communicate back to the state if something was wrong. And sometimes it's
I
like
see.
we just leave it and go. That's the whole point of like trying to automate something. We don't want to keep checking
Mm-hmm.
in sometimes, right?
Mm-hmm. Mm-hmm.
But tools like this, we do unfortunately still need to have the human side. We need someone
Yeah.
still doing the checks,
Mm.
which is,
Okay.
I think, where, a managed service like Tax Hero is a differentiator.
Gotcha. 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 I'm curious, as a business owner and operator, I'd love to learn a little bit more about the sales motion and the sales pipeline for you guys. Like, is there a common trigger in the founder's journey, or a pain point, or a problem that they run into that kind of motivates them to come looking for a solution like you? I mean,
Yeah.
as you say, it's not exactly the sexiest topic, like no disrespect, and
Yes.
and a
No.
lot of people, perceive this as a bit of a, cost center. It's not necessarily a growth driver. So when and how and what is it that prompts founders to come looking for someone like you or a product like this?
So we usually see a lot of people as soon as they get notices, we
Ah,
see them
okay.
kind of come to us. And then we see
Yeah.
also a lot of people that realize that the cost of their current solution is very high. So they're going
Mm-hmm.
out and kind of doing bids on, what else is out there that can solve other problems and not just like, being a sales tax compliant. TaxHero
Mm-hmm.
starts as low as like $10 per month, and it kind of
Mm,
goes up based on volume that you have. But we're
mm-hmm.
pretty affordable for most of our clients, which is where we see a lot of people come in. And also people come in because they get some notice or some, software messed up or something got messed up.
Mm-hmm.
And so they're like, we need someone just to handle this and I don't want to do it.
Yeah.
Another big thing that we see is like other accountants, honestly, will come to us and say like, this is not a value add for their line of business either, right? So we
Yeah.
see that like, okay, can you just fully take this on? We don't really want to deal with it.
Right. Right. Okay. Interesting. And I guess the accountants, they're probably going to have a better appreciation for the problem that you're solving than the average founder would, right?
Correct, because they know the actual risk versus the founder, like what you said in the beginning, right? Of like, hey, I might be too small. I don't need to worry about it, is a
Yeah.
mentality that I am trying to change, right? Like I'm trying to just explain to people like,
Yeah.
okay, it's actually better right now. Like think of sales tax compliance the same way you think of business insurance sometimes.
Mm-hmm.
It's not a cost you'll see a return on every month, obviously, but the
Mm.
one time you need it, you really need it at that
Yeah.
point. If you're
Yeah.
coming to us with notices, there's already something you're going to have to pay, unfortunately. And there's
Yeah.
only so much we can do to get you there. We can help you with other states, of course, but like it's kind of
Mm.
like you lose your privilege or your leverage, even, right? Is significantly
Mm.
reduced once the states know something. Like you can't
Yeah.
use a
I see.
VDA, which is a voluntary disclosure agreement with the state. Like your options are really reduced once the state knows, right?
Mm.
Uh,
Mm.
so that's why I say like the ROI of getting compliant is pretty simple. It's like the expected cost of an audit, which could
Mm-hmm.
be thousands of dollars, versus the annual cost of prevention, which is like
Mm.
you're not the one actually paying the sales tax. So
Yeah.
the cost really for a founder to get compliant is the cost of like a managed service, like which I
Mm.
said costs at like $10 a month, cup of coffee these days,
Mm.
So that's what
I
I would look at it.
So let me ask you, Lahari, if a founder is listening to all this and, taking it as a bit of a wake up call and going, all right, this is serious business and I need to deal with this and take care of it, and they wanted to say, do a quick self-assessment to just understand like what's going on, how big or how significant could this problem be right now? What are the 3 or 4 questions that they should be asking themselves?
Yeah. So I think the first thing is like, do they know every state where they meet the revenue threshold or economic nexus, you could say, for that state? I think just
Mm.
even looking overall is like saying
Mm-hmm.
if they crossed 100,000 in the past 12 months in any states. The large states,
Mm-hmm.
Texas, California, New York, is a larger threshold of like
Mm.
500,000, but every other state is almost 100,000. There is differences, but just
Okay.
from making it simple, look to see where you cross that 100,000
Mm.
in the last 12 months. And then the next thing that they should look at is like, are they registered in every state where they do have that
Yeah.
nexus?
Mm-hmm.
Um, a part of that is also like, is there any states that they're collecting in on the back end of
Mm-hmm.
Shopify or whatever platform
Mm.
that they did not register in, but they're actually
Mm-hmm.
collecting sales tax in? Like I said
Yep.
before, it's actually worse than not collecting at all, to be honest.
Yep.
Um,
Yep.
and then the third question that they should see is like, is their product taxability configured correctly in every state
Mm-hmm.
for supplements, food, or beverages? There could be a gap. So just making sure of that. Like, do you know that by state? You know?
Yeah.
And then the
Super
last
helpful.
question that I would say is like very important for them to know and make sure about. And like, if there is a gap here, I think this is where they need to get help is like, who owns this on an ongoing basis? Not
Mm.
like who set it up, but who's actively monitoring it today, like watching for
Mm.
rule changes and is accountable if something goes wrong, right? So if
Amazing.
they
Yeah.
can't answer that question for, then I don't think
Mm.
they really have the compliance part together. And then that's where I think I would, reach out for some help to get that.
Yep. Yep. All super helpful advice. And I would add that a lot of the data that you just listed or mentioned there is available through Shopify. Like if you go to your analytics section, I think there's a
Correct.
report for sales by state or, sales over time by
Correct.
state. You'll be able to get a report, change the time period to 12 months, last 12 months, and then see what you're selling in every single state. And I can't remember where it is in the Shopify settings, but there's going to be another section in there somewhere for sales tax settings. And you basically
Yeah.
want to match up how much you're doing by state with, where are you actually collecting on the sales tax settings tab, and just make sure they're aligned. So it's pretty
Yeah.
easy data to get to self-serve on, and just understand
Correct.
whether you've got a problem. So if someone's gotten to this point, they've looked at these reports and they go, all right, I need to get this sorted out. Help us understand what the cost of actually getting compliant looks like here.
Yeah. So most states, so compliance honestly is pretty cheap. Non-compliance is where it gets expensive. So like I was
Mm-hmm.
giving you guys that, frame it as an insurance decision, not an administrative one, is what I would say. But the
Yeah.
cost of actually like registering in a state, for example, most states it's free to register because they're getting the
Mm-hmm.
revenue from the sales tax you're submitting for them. Maybe some
Mm-hmm.
states have minimal one-time sales tax registration fees, like it's $100 max, but that would
Mm.
be it. Um, and then there's voluntary disclosure agreements if you have to do it, if you like want to negotiate back sales tax,
Mm-hmm.
and you owe a lot of back taxes.
Yeah.
And then I think the main cost you need to think about is your ongoing managed service, right? So
Yeah.
like whatever managed service you decide to pick on or choose, like that is where the cost actually comes in, which starts at, for TaxHero starts at like $10 a month and then scales up with volume. Other companies charge differently. So that is
Yeah.
the true cost that I would look at, because if you're looking at it and you can compare it to a single audit, right? Assessment that
Mm.
can run from 50,000 to 300K sometimes.
Yeah.
So the true cost is actually your ongoing managed service, and that is what you're paying per month.
Yeah. Yeah. Okay. So $10 a month is ridiculously cheap. I didn't realize it
Yes.
was,
Yeah.
that affordable to get started. But can you give us a sense of, and I assume that's for a fairly small brand, but like if we were doing, say, $1 million a year and we had a fairly, average distribution of sales by state, or if we were doing, say, $10 million a year, and again, we had an average distribution by state, like, order of magnitude, is a service like this costing us hundreds of dollars, thousands of dollars? Like what's the
So
typical price tag?
TaxHero caps well, we cap our monthly charge at $1,500 a month max, and that's like if you're in every
Mm.
single state, like 46
Okay.
states, and your
Okay.
order volume is like above 10,000 orders per month. If you're
Right.
doing about like 1 to 2 million, our costs are significantly less. So we
Hmm.
charge for order volume in Shopify. So for most of our brands that are doing a lot of D2C, if brands
Hmm.
are doing mainly wholesale and have some D2C, then we can charge per registration and per return.
Got
But
it.
like a $1 million brand is typically paying somewhere around like 100 to $200 a month
Okay.
max.
Yeah,
So
that's not
it's
a lot.
really affordable. And even a $10 million brand is not paying the 1,500 per month. We usually see brands that are a lot higher and that are in every state. Like I was saying, that's when we see that 1,500 per month max.
Yeah.
Again, what we charge.
Got it. I mean, $100 to $200 a month is ridiculously affordable. I mean, it's
Yeah.
like if you put it in the context of, it's less than an hour of your time as the
Yes.
founder.
Yeah.
And I mean, just to think to yourself, like, is it worth having this problem go away for less than an hour of my time value? And, just know that someone else is taking care of it. Like, yeah, it seems like a freaking no-brainer. So,
Yeah.
tell me, where should people go if they would like to learn more about you or TaxHero?
Yeah, they could visit our website at taxhero.net, and there they'll be able to book a call directly with me on the website. And I think for anybody that's like hearing us on this podcast and kind of tells us that they, came from Profits on Purpose, we will do a free assessment, a sales tax compliance assessment for them to even just like let them know where they're sitting with their sales tax.
Mm,
So that they can kind of make that decision of what they want to do for next steps themselves.
Well, there you go. I wasn't expecting that. A free gift for
Yeah.
my
Yeah.
listeners.
Yes, of
Thank you.
course.
Well, I'll make sure I include a link to that below. What about social media? You on LinkedIn,
Yes.
Instagram? Like, where should people find you online?
Yes, you can find me on LinkedIn. I am the only Lahari Neelapareddy that I think that is out there.
Okay.
So very, very lucky for that. So, yeah, you should be able to find me on LinkedIn. And you can always shoot me a message there as well.
Okay.
And I'm always, kind of digging deeper on there as well with sales tax issues that we're seeing.
Yeah.
So follow me as well on there.
Okay, perfect. Well, Hari, thank you very much for joining us today. And I really appreciate the education in all things sales tax related. I hope folks have, gotten an appreciation for this topic from listening to our conversation today. And I guess the big takeaway from me is that like for a few $100s a month, maybe as little as $10 a month, who knows, depending on your brand, like it just seems like a no-brainer to make this problem go away. One less thing that you have to worry about and stress about as a founder. So if you haven't already, done so and looked into this, I would encourage you to take Lahari up on her generous offer and get a free audit and review. At least that way, you know where you stand, right? And at least that point, you can make a decision and say, yes, I want to go forward with this, or no, I don't, up to you at that point, I guess. But at least you're informed and, having the right information and the right context is, an important first step here. So thanks again. Really appreciate your time and thanks for coming on the show.
Yeah.
Take care.
Yeah, this is great. Thank you.